is top of mind, first of all, before we get on to tariffs and macro policy, what is top of mind at the breakthrough dialogue at a time where we're looking at NVIDIA at a $4 trillion market cap? We're talking about the talent wars around AI. What is top of mind right now when it comes to tech and the kind of conversations that people are having right now?
Thanks, Tom, and good to see you again. I would say that we're trying to make sure it's not all about AI, but I'd say top of mind are all the ramifications around AI. It's interesting, when we did our first summit 4 years ago, we were on ChatGPT 2.0. Often people forget that was in the summer of 2022. In November, we came out with the generalized release of ChatGPT, which is based on 3.5. So the evolution of AI has been huge. We've moved into areas like agentic, we've moved into content engineering versus prompt engineering and thinking about all those other ramifications. So I think a lot of people are thinking, where is that story? Where is it headed? What are the pinch points? Is it compute? Is it data? What kinds of data? But I think beyond that as well, we're trying to see, or there's a lot of interest in, how is AI morphing into other areas, synthetic biology, in the medtech space? What does that mean? In material sciences, is it feeding back onto itself? And one of the great things we have is we have a mix of people to be able to debate these. And
Bank of America and other banks, of course, are leaning into AI. Yeah. Where are you seeing, Bernie, efficiency gains as you implement some of these solutions across the bank?
Well, so we've been on the AI journey for a while. What a lot of people are talking about right now is generative AI. So in the AI space, we've been along there, and we've been leaning into that. We have Erica, we have 2 to 3 billion, contact points from our 70 million or so domestic clients in the US that are using in our retail space. On the generative space, we've been leaning in, trying to really think through our work processes, think through how we use data, trying to get efficiencies around the place. I was on the West Coast about a month ago, and I was talking to a very senior tech leader, and he was surprised at the small number of people that we use in our contact centers to support our incredible retail space. So we've already made a lot of progress there.
And is that, as we look at jobs being reshaped and the questions as to whether or not jobs get replaced or enhanced, is it at the back office? Is it the customer service where you see job displacement as a result of some of these AI products?
No, not necessarily. I think that was the point I was trying to make, which is that perhaps in some of the contact centers and back office, traditional AI, if I may call it that, has already had a lot of innovation. Look, I started in trading. We had 20, 30 FX traders. You'll have 3 or 4 FX traders now trading 10 times the volume. So that has happened. I think the interesting with generative AI is that it's so creative, so transformational, that we all need to step back and rethink how we do things. We have to throw the old orthodoxies away. And so that's the process of working through. So I think every firm has a few specific areas, with junior bankers, with some of our operations areas, absolutely. But the idea is to really take some of these proof of concepts and see if you can get better compliance, whether you can get better, trader metrics, better analytics to help your clients.
Do you think longer term, though, you will need fewer junior bankers?
Unclear, because I think that, when I look at my analogy, perhaps might be in the trader space, you might need fewer FX spot traders, but you have a few more FX options traders. You'll have a few more structured FX traders. You have more time to talk to corporates about their asset liability management as you have some of the macro wins that are taking place. So the junior bankers might not be creating pitch books in the way that they were, but perhaps they might be, analyzing industry trends a lot better, perhaps feeding in other data that hadn't been accessible before and seeing how we can use that to help our corporate clients.
On the macro front, a reminder this morning in terms of the tariff volatility, with tariffs threatened 50% on Brazil, 50% on copper, yet global stocks are close to record highs.
Yeah.
Is that rational to you, or is there complacency in these markets?
I think we say the markets are always rational at some level, at some point in time. I think that the markets are pricing in the information. There's so much more information now versus early April. And I think what the markets are saying is, okay, we have a lot of information that might come in on specific tariffs. You mentioned the ones that came through last night. But looking through that, where do we see value, or where do we see, opportunity? So in very specific sectorial areas and specific companies, I think people see value there. I think in other areas, some value has diminished, absolutely. So the headline numbers may be where they are, but I think what we need to look through is say, where in tech is it doing, or where in the supply chain might things not be doing so well.
And in your conversation with corporate clients, what are they telling you in terms of where the cost of tariffs lands? Is it squeezed margins, or are they passing the cost on to the consumer?
It's interesting because also you're trying to look at that in the inflation data and saying, is that going to hit? When is it going to hit, right? So a lot of economists' projections on, is there a recession? A lot of that has diminished. In our fund manager survey, the confidence in terms of, I would say the US economy and the broader economy is much better than 2 or 3 months ago. I think from the corporate space, my sense is that there is some absorption of the cost there. It'll be really interesting to see as we get through Q2 what earning results are like. So there's been some sense that there's some absorption of the cost, but there's also real efficiency gains. There was some pre-stocking coming up in March, and 1 or 2 have sort of said, well, we had a 4 or 5 month, maybe 3 or 4 month horizon in terms of where tariffs might settle down. Then we know what to do. We're in that zone now. We're sort of 3 or 4 months in. I think if there were further volatility around tariffs, then things might be back on the drawing board.
And as a US bank, but with your global purview, the time you spend internationally, we've heard from some banks that they're losing out on bond deals, for example, to domestic banks because those clients don't necessarily want to deal with US banks as much. Are you seeing that at all? Are you losing out on any bond deals as a result of that to domestic
I haven't, and
players?
I have been asked that a couple of times. There's been nothing that has hit my radar. We have to be out there all the time, and I think our proposition, which is trying to be close to clients and provide that value, remains, and I think there's very few of us at our scale that can do that, across the globe. So as we're in the C-suite, in the treasury offices, in the CFO's office, I really haven't seen that.
Before we let you go, on the Fed, I was speaking to the UBS O'Connor CIO yesterday. He said markets are underestimating the risks to Fed independence in 2026. Do you agree?
I'm not sure if they're underestimating it. I think that if you look at the forward prices in the markets, the markets are pricing where they think rates will be next year. I think in that price signal is some sense of what they think the Fed's reaction function will be next year. I think for all of what we hear, the market data will be what it is. I think the 10-year rates where they are reflect a reasonable assumption as to what growth rates will be. So independence or not, I think there'll be a range of there'll be a sort of a range of activity or a range of outcomes that I think the Fed will look to work towards.
Bernie Mensah, thank you very much indeed.